Miss it. Oh man, I'm Kramer. Welcome to Mad Money. Welcome to Kramerica. Other people want to make friends. I'm just trying to save you a couple bucks here. Oh man, my job is not just to educate, but to try on days like today to entertain. So call me at 1-800-743-CNBC. Every day in this market, there are huge moves in individual stocks that often influence all trading. Moves that are metaphors for the larger stock market as a whole. You have to be able to learn from these big movers. First, you have to decide how relevant they may be. Are these the main events? The real card? Or are they just some sort of lesser fight? Some stocks can tell you a great deal about the action. To assess their significance, you need a seasoned pro like me. I'm a stock whisperer, which is like the horse whisperer or even the dog whisperer, only more profitable. As your coach, I will try to help you decipher the true message of these stocks, because the signals are often mixed and confusing, even in the best of times. Today's battle of wills between the bulls and the bears was all about a metaphorical knockdown, incredible drag-out fight between the fantastic restaurant chain that is Panera Bread, PNRA, up 7% on a strong quarter and a boosted outlook, versus SPX.
Little yellow bug.
The huge heavy machinery company that makes transformers. Well, I mean, you know, the real ones, like those big metal towers. That was down over 11%, courtesy of a major guide down. Panera is all about consumers trading up from cheaper joints, like the McDonald's, the Burger King, the Wendy's, the Taco Bell. SPW lives and dies based on infrastructure spending, infrastructure orders. Think those big transformers that utilities put up. It's essential to the dumb grid. Now, Panera's telling us that things are good, and they're getting better. Heavy machinery company, the SPW, says things were good, but now they're getting worse. And today, the market, which plummeted 119 Dow points and a 2.7% pulverizing of the NASDAQ, says SPW, its machinery business, its transformer business, is right. And Panera, with its delicious breads, is wrong. Let's delve into the Sandwich Tower grudge match to see why the metaphorical winner creates such a nasty moment for all but the most recession-proof of stocks. Panera up big should mean that the consumer's feeling better, right? I mean, the old chili bowl, right? SPW down big should mean that utilities and industrials, the corporate economy, is doing worse. You need more transformers from SPW when you build more housing developments. You need to string electricity through them. We saw new home sales down today and mortgage applications plunging. I can't be positive on this issue at the moment, even though I've tried to be. SPW is all about the utilities being flush, or not so flush. And given the nation's reduced power needs because of the slowdown, that's not a good sign either. Most important, SPW needs government funding to get the big orders. The money's got to flow from Washington to those entities that could use even more power and tower. And I am adamant that Congress is not giving enough support to the American economy. Congress debates a public health care option while infrastructure burns. Again, a tip that SPW is more emblematic than we would like, and Panera is more irrelevant. I finger Congress for why SPW sees things turning worse, not better. Now let's take a look at the broader market based on the prism of Panera and transformers that SPW makes. Given the incredible clocking of the industrial stocks today, perhaps courtesy of SPW, we are right to worry that a new leg down might have begun. Remember what got us to where we are. We've been led up from the lows by the 3-in-1 amid. Remember all our different mids? The 3-in-1 amid was tech, oil, and banks, the trinity that got us here. All three created the bottom with orders stabilizing for tech, the oil futures rallying for the petroleum sector, and the nationalization off the table for the banks, courtesy Ben Bernanke and his unbelievably good 60 Minutes interview in March. As we stated the other day, given the run the stock market's had, the idea of stabilizing, albeit at lower levels, is a good reason not to be back at Dow 6,500. But it is not enough reason to be above Dow 10,000, which is why we've been saying we believe we have seen the highs for the year. In each leg of the three-legged stool, we see the machinery outlook from SPW and its Transformers division creeping in. This morning, Acer, a very important low-end computer maker, said that it sees business tailing off, a la SPW. That brought down all the tech leaders today, including Apple, even though that's gaining share and looking good. And Google, which we just heard from, making a good quarter. Remember Gaga? Lady Gaga stands for Google, Apple, Google, Apple. We don't want to see leadership breaking down. It's crucial to any rally that it doesn't happen. Frankly, those stocks should have turned up today. I thought they would. The banks have caught some of the SPW flu, the swines, with a sense that housing is stabilized, albeit at lower levels. And employment may not even be stabilizing. We'll see some critical numbers tomorrow. If they're bad, well, we're going to see verification of Transformers, not the old chillin' bowl. That means the selling seems to be justified in the hallowed Group 2. Oil prices seem to have reached a level that they simply can't penetrate, are now trending down, along with other stool legs. Not only that, but the companies that managed to buck the downtrend today are Symbatico with SPW sell-off, not Panera's rally. Look what did well today. Walmart, which does well even in a recession. Coca-Cola, which holds up in the event of a thermonuclear breakdown of the economy. And Colgate. The latter always worries me. Because you know what? You brush your teeth even when you're out of a job. Don't forget to floss. My mother always said, don't forget to floss. So, if you look at today's trading, with SPW down huge, along with tech, bank, and oils, my conclusion is this market smells no end to the recession. And that we have seen the highs. The three-legged stool is falling, and it's falling the Transformers way. Panera looks like, frankly, it's just a better sandwich and a better place to eat, and no more than that. Now, I was hoping that we could swing the big old baguette like a Ryan Howard or an A-Rod and send these Transformers flying. Flying right out of the park. That looks dead wrong now. It seems as the Downward Transformers are going to eat the Paneras for lunch. Two stocks enter, and only the bearish Transformers come out. Here's the bottom line. The SPW is telling the truth. As falling new home sales, rising oil inventories, and a new wrinkle of fourth quarter slowdown in computers tells us that like this falling Transformer, we're going down. If you haven't nailed down some gains, as the new Kramer Cannon says, you won't be getting back to even. We've told you that a 5% to 7% decline could always be in the cards. The Transformers, the chilly-faced Transformers, are saying that SPW is right. The 7% solution, at last, is upon us. Sanford in New York.